check the day and the date. I don't even know what day it is anymore sometimes. Here for just a quick review. Today's going to be super, super quick. My computer restarted overnight, and I was kind of rushing to get things updated prior to launching the live stream today. But some of my futures charts are still messed up, and which is fine because it gives me an opportunity to, I think, continue forward with making a migration from one system to another. I'll talk about that in just a second. So what we'll do is we'll start over the Forex side of things, and then we'll hit the crypto side of things. Then I'll just real quickly touch on what I'm doing in futures, and then we'll let you get out of here and get on your way. Remember, the purpose of everything is to just let you guys know about some simple strategies that do work. You don't need a ton of indicators or any convoluted system to make money trading. You just need a simple strategy that you can stick to, that gives you a slight edge in the market, have good money management, and the mental fortitude to stick to it, which it is pretty simple on the surface, but we provide you with tools to do all of those things. So let's work through it. So starting over here with Forex, what is going on with Forex? Well, let me drag this over. Just got things moving a little bit ago as we came into the U.S. session. We've watching the currency strength indicator here, looking for potential trading opportunities. Really, the U.S. and the New Zealand are probably my strongest. Not New Zealand. I told you it's been early. No, yeah. New Zealand has been my strongest and my weakest currencies here. USD versus New Zealand. Not really digging the New Zealand trades. I know I took one the other day. It's really against what I typically trade, mainly because New Zealand has high spreads, and when we're looking at this type of breakout, which is what I'm using, which is only a 20 pip, 20 pip spread from top to bottom, and then a 20 pip take profit or 20 pip stop loss. Excuse me, my nose is really stopped up today. When you're looking at something that's only 20 pips, if you've got something that's got a 5 pip, 6 pip spread, it eats up a lot of your risk just in spread. So I move on from that. So then I started looking what else is moving in the marketplace, and we see we've got the euro just kind of peeking through, starting to move to strength as the U.S. session got underway. Euro versus the CAD. The CAD is another weak currency here. So Euro CAD looked like a nice pairing, and as I went through and looked at the potential pairings that are out there and how they're stacking up as far as what our movement is for the day, how things have been moving for the day versus their averages, we can see that this has actually pretty nice look coming into the new session. We've moved, and at this point it's 70 some odd pips. At the time it was into the high 60s that we had moved for the current day, and we can see our average is typically much higher. We're 140 pips on average for that range. So I look at that and I say, well, we've got some divergence here, and we just took profit on that. We've got some divergence between the euro and the CAD. It looks like a really nice opportunity for movement. They're both showing movement, which is great. So each of these individual currencies is moving, so I pair them together. That gives me a good opportunity to find a currency pairing that's got some momentum and could potentially continue on. As I've said before, nothing that we look at on a chart means something will happen. We just look for the best odds, right? So I find two currencies that are moving, gives me good odds that that's going to continue on. And then I look at the range, and so I want to do some deeper digging, because in doing that, we can, here, let me just show you another example as I talk to this one. Here, let's look at this. Let's just pretend like the euro and the pound were also moving. Let's pretend like the pound was also below the midpoint and was weakening as well. If we had to choose between the euro and let's say the pound was as weak as the USD, right? Let's just pretend the pound is the USD. This is pretend land right now. If we were choosing between, let's say, the euro moving against the pound or the euro moving against the CAD, we came into this, at the time of looking at the market, if we had seen that maybe the euro pound had 33 pips, but its average is 33 to maybe 50 pips, and we've already moved 30 pips, do we have 20 pips in it? I mean, it could, of course, but is it likely? So it's got a lower likelihood of continuing on, so we wouldn't look at that. Also, as the session started, we were actually seeing selling pressure as opposed to buying pressure when we look at the volume as it compares to price. So, those are things that we would look at when we're making that determination. So, we chose the euro versus the CAD. We had obviously the range working for us, so we'd had a small amount of the current day movement as it compares to longer term ranges, the last 5 days, 15 days, even the last 30 days. So we say, hey, we can look at that and go, okay, well, great. We've got some opportunity potentially for continued movement based on the averages. Also, as the new session was getting started, we could see that we'd been in a bit of an upward trend leading up to that. This is only a 5-minute chart, right? We'd been in an upward trend leading up to that, and we had our volume detail, which is time segmented volumes, by the way. Our volume detail was showing us that we've got buying pressure, buying bias with that movement. So everything lined up for us to be able to go, okay, this is a viable trade. And at the time we took this, the price is sitting around here, down here in the middle of this blue box. So I just pushed buy, which parks a buy order at the top, parks a sell order down here at the bottom. If price goes the other direction and doesn't fill it, then you just close it out and move on. If price continues though, as it looks like it might, it breaks through the top of that box, fills the order, and then it has a static stop loss, has a static take profit with a trailing stop loss, which gives us that edge over the longer term. So there we go. So there's a forex trade. We can see we just took it, saw that kind of explained live. We also saw profit live. I just want to reiterate, just because that one went pretty much immediately into profit, that does not always happen. You're gonna have, like yesterday, for example, yesterday we had a trade on the pound CAD that let me just pop over. Come on, turn off that auto scroll. Oh, my charts reset last night. Everything rebooted, and when my charts reset, my previous day's box is gone. Dadgummit. Yesterday, it was right here. We moved. We were short on it. It came down, came back, stopped us out, and then moved on short after that. So anyway, you're not always going to have a win. You just want to have, get that put back over here. You're not always going to have a win, right? No trading system is going to give you 100% wins. You're playing the odds and the probabilities, and then you're stacking money management with it, which gives you that positive expectancy over the long term. So, like in the case of this breakout strategy, for example, we've got a fixed take profit level. We have a stop loss that trails. So our take profit is always going to be 20 pips, which equates to, by the way this works is it's taking a percentage of your account as risk. So you're always risking 1%, 2%, 3%, whatever you choose as a percent risk. So the pip value per currency pairing is kind of irrelevant, because it's going to change your lot size to be appropriate to give you that 1% risk or 2% risk, or whatever it is you're risking. Ultimately though, 20 pip stop loss or 20 pip take profit with a 20 pip stop loss initially, but it trails, right? So your static win is always going to be 1% or 2%. Your loss is always going to average out to less than that. There's going to be times when you might have a full loss, but more often than not, even if it pops through there with some momentum, you're going to pull off some of that initial risk. So your average loss is always going to work out to a fraction of a percent. So if you've got a 1% target, you're going to have a fraction of that as your loss. You push that out over the long term. Even with a coin flip, you end up with a positive expectancy. Do better than a coin flip by giving yourself some edge in the marketplace utilizing a very simple strategy like we just showed here in Forex. Use a very simple strategy to look for the currencies that are actually moving. Put that on, look at that currency pair chart, see what the volume detail for that specific pair chart is doing, and look for the current day's movement and see how that compares to the average, and see if you've actually got, quote, gas in the tank for it to continue on, for that potential move to continue on. Combine those things, it gives you a very simple strategy, and it gives you that opportunity to have positive expectancy over the long term. So there you go. Let's have a look at crypto real quick, and then I'm going to let you go because my futures charts are all messed up. You can see where on my Forex chart it took away the previous day's stuff, so we can't see that. And now all my futures charts have reset. Some popped forward, changed the forward month, obviously, because the other contracts expired. So we've changed the forward month, which has changed some things and created new charts, and obviously erased my support or resistance levels in futures. So I've got to get those reset this morning before the regular trading hours start. But let's pop over here and have a look at what's happening in the crypto market, and then we'll let you guys get on with your day. So popping over here, what's happening in the world of crypto, in the world of Bitcoin and Ethereum. So yesterday we talked about Ethereum. We had a big move long. So the 4-hour bias is long on this. It continues to be up. We pushed long, but we came to this area up here, 172. It's been a kind of a major point of resistance for us. You can see it here. Earlier in the month, it just kept hitting its head and repelling off. Had a big move into it, a lot of momentum bringing us up to that. But then again, it's been hitting its head, repelling off of that. So currently we're trading below the 172. We're right here at 170. We are, though, and the 4-hour trend is up. So what do we do with that? Well, when we're trading support resistance this way, we can look at a couple of things. We can trade using either a breakout, which would tell us if we break of a key area, we could look to go long off of that key area. So we're looking for long trades, by the way. Because if we're trading with the trend, we'd be looking for long trades, and the 4-hour trend is up on this, so we'd be looking for long trades. So different ways to look for longs. We'd either be looking for a breakout of that key area here, breakout of 172, or we could look for pullbacks, and we talked about that yesterday as well. It's the same number really, sitting here around 164 and a quarter, 164 and a half. If price pulls back, this was previously resistance down here. So if we pull back to this key area, this would now become support for us. So we can look at one of two things. We can either look for a pullback to that key area. So that, looking for a pullback to what's now a support area and then go long from there. Or we wait for a breakout of a key area and go long from there. There's also a combo strategy that you could potentially trade, utilizing trends on a longer term than executing pullbacks and breakouts on a shorter term in that direction. And that's discussed in some of my videos from the week before last. So feel free to check those out. I have mentioned I do owe you guys. I need to put that strategy into the members area specifically for you, but we'll get to that. I haven't had a chance to do that just yet. So anyway, that's one way to look at Ethereum. Bitcoin, same deal. We had a lot of momentum. Came up to what's really a resistance point up here at 7,000. So we're hanging right around the 7,000 area. We have broken above it. So we're still a little more resistance, maybe at 7,100, 7,150 up here. So if we can break above that, I think that'll continue on. The trend is still up. We had a little blip the other day where the 4-hour trend had reversed on us, but we're back to looking at long opportunities over here. So looking at long opportunities, same thing, same exact process. We'd either look for a break of a key area up here, so 7,100, 7,150. Look for a break of that. We could take that long from there, or you could look for pullbacks. Back down to some other key areas. You could look as probably right around here, 69.50. pull back to that 69.50 area and look to take it long off of that if you're looking at bounce trades. Or there's that combination of the bounce and breakout, utilizing shorter time frame, and then as it pulls back, looking to break of that previous lower high as price is pulling back on that lower time frame. Again, that's discussed in other videos. Really, any of these things, any trading system for that matter, anywhere, there's pros and cons to it, and I feel like it's so I'm not here to give you specific trades. I'm not here to tell you trade this at this time in this way, because it doesn't typically work. Why doesn't it work? Because everyone doesn't get the same results, because everyone doesn't actually do it. People are going to manage their trades intraday in a different way. People are going to pick and choose which trades they take. It's better to teach you how to create your trading system and create a trading system that works for you. And that's so important. I know I sound like a broken record, but go to anybody that actually has some experience in the market and trades, and they'll tell you the exact same thing. You've got to have a trading system that you can work, something that you buy into mentally, so the little back of your head subconscious doesn't start eating away and cause you to break your trading rules. You've got to have good money management, so you've got something in place that allows you to risk an appropriate amount to your account size so that you can live through series of losses, which you're going to have. Any trading system has series of losses, and gives you that ability to have a positive expectancy, so when trades do move, you're winning more than you're losing. And then you need that entry process. How do you enter new trades? How do you manage those trades? And there's some super simple ways to do it. As I've mentioned, breakouts, bounces, and combination strategies don't require a ton of indicators, and they can give you that trading edge if you execute them well. Which one works best for you? That's where you doing the homework comes in. Take a step back. Take the weekend. We're coming up on the weekend. Take the step back. Look at what different ways to approach the market. Document that plan and look at it over a series of last 100, 150 days, 200 days. Get yourself a good sample size of trades so that you can really see, okay, here's my expectancy. I've kind of, back of the napkin, I've gone through and I've looked at this on charts, on X time frame. And if I trail my stop, this happens, but if I use a static stop and a take profit of 2x or 3x, this is what happens. And it allows you to get, well, like I said, an expectation of what your trading plan will do, which helps you with the subconscious and so on and so forth. But importantly, though, it's a trading plan that you've created specific to you. You've utilized some general rules that are effective, but then you've made it your own. And that's what's going to help you be successful over the long term. So anyway, I'm going to let you go from here. I don't have a whole lot to talk about. I was going to talk about futures. So my future stuff, all flipping reset, which is okay because I'm migrating over. I'm migrating from here, which I've been trading with Interactive Brokers for a long time, and I love them. I like Interactive Brokers, but I've had a lot of the tools that I utilize over here, well, not here specifically, but over here in Forex and in MT4 and MT5, I'm having those tools coded for TradeStation. And TradeStation's pretty great. You can use it either on the TradeStation app itself, or you can also integrate TradeStation with, over here, you can integrate it with your TradingView charts. So there's some other other platforms to use, but I'm migrating all of my interactive. Sometimes words just don't come to mind. My Interactive Broker stuff over to TradeStation, so I can trade it here using those automated processes, because everything I've done in Interactive Brokers has been totally manual. Automated processes are definitely a key for me. And as I've mentioned before, a way that I'm really trending this year, I'm trying to implement more and more and more automated processes. So you guys know I've got a bot working in the crypto market. It's called CrystalBot. There's another bot that I'm testing right now, live testing using Bybit, which allows us to go long and short. The Binance, so CrystalBot sits on Binance, which allows me just to trade one direction, right? Just you can just buy, go long. If you're out of the country or in different jurisdictions, you may be able to utilize Binance's leverage trading. Allows you to go long and short on that. Where I am and the way my Binance account was set up, I can't do that. Now I could work the system and make it happen, but I'm using a bot that's designed for that. I'm not worried about it. Bybit, though, will allow me to go both ways, and the bot from the same folks that created CrystalBot have another bot that is trading both directions on Bybit and doing really well. And I'll be sharing that with you guys here in about a week, maybe week and a half. I'll have some stuff to share with you on it, how it works, what it is, all that good stuff. But it's rocking. It's rocking along. Also, looking at automated processes here in, well, I'm pointing at something you can't see over here on one of these monitors, looking at some processes in the futures market that are fully automated as well. And then I've also got some other processes over here. Let me see if I can show it to you. Dun, 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 dun. Can I get this up for you over, what's the right screen? Which one do I need? This one over here that are automated as well. Cat charts. This is pretty slick as well. That goes long and short. Looks at buys and sells, and is performing really well. You can see we got a buy signal back here, which was actually on this candle. So you can see the buy signal, the first buy. When it goes to a 1, that's telling us to buy or sell. So it goes to a 1. It was on this candle right here, 139, and we're currently riding that trend. We're at 170, 169 right now. So this is another method that is designed for crypto, but it works equally well with other instruments as well. So this one isn't fully automated. This is more of it's indicators that give signals, and it's not fully automated yet, but this is one also that I'm utilizing. And then of course I showed one the other day in the futures market that works on TradeStation that we're looking to implement. And then also the regular trading methods that I have, that I really like the intraday strategy utilizing that combination strategy using pullbacks and then breakouts of candles, using direction of the overall trend or a longer term trend, trading that on a shorter term, which you guys can find. I'm going to put a training online for you with that. So anyway, long story short, I've got this recent change, my system restarting last night kind of forces me, because I have to redo my charts anyway. It forces me now to go ahead and just do that migration. I typically just leave my system running, don't mess with it, right? But whenever Windows chooses to just kind of restart on its own or do some update on its own, it makes me just go, you couldn't wait until Saturday? Anyway, now I'll spend the day doing that. It's all good. Forces me to make the change, and then I'll be able to start rolling out some of these other stuff to you that I'm utilizing in TradeStation, so you guys can have access to those tools as well. All right, well that's it. It's about 8:30 Eastern. Still got another hour before regular trading hours begin. Forex obviously has been rolling, for the last 30 minutes already. Crypto never stops, never sleeps. So you got something that you can do. The big thing is just take action, right? Take action. Have a trading plan, execute your trading plan. Don't go looking for trades, look for trading opportunities based on your plan. And that's going to put you, ahead of the game. All right, so thanks for sticking with me. Have a great day. If you like the stuff that I talk about here, if you like the strategies that we talk about, the simplicity of what it is, maybe just even the realness of it, let me know. Share this with your friends and family. Share this with folks. It's all free. My education's free. I'm not charging you a dime to come here and learn about the simple stuff that actually works, get some trade ideas from it. Share it. I do have tools that are for sale. If you'd like to support it, buy the tools. But share it. Let people know about this stuff. There's a lot of folks out there that have very hypey ways of spinning copy to you. I'm not about the hype. I just want to give you the real stuff that works. Right? That's all you need. The real stuff that works. So anyway, that is it. Have a great day.